Ladies and gentlemen, you can look at short-term price action until the donkeys come home, but at the end of the day, it's not going to mean much if you do not see macro price action as a result of it. The only reason that short-term price action is relevant at all, there's two reasons. One of them is if you're a short-term scalp trader, which most people are not. The second reason is because short-term price action can domino effect into macro price action. Macro price action, breaking of macro ranges to the upside and the downside, the start of new macro moves is really the only thing that matters. And that's why in this video, I'm going to bring forward 4 questions. Some of them I've answered before. In fact, all of them I've answered before, but I'm compiling it all into one video. And I'm going to show you all the relevant charts that you need to see as justifications for my answers on each of these questions. So what are the questions? Well, question 1, what needs to break specifically for a move to the upside? Question 2, what needs to hold specifically to avoid a Bitcoin bear market? And in that question, you'll also get the answer of what a bear market would look like, what the start of a bear market might look like. Number 3, what needs to break for an altcoin season to potentially occur? That's a little bit speculative, but I'll do my best. And then number 4, what charts and indicators might mark the top regardless of what the next macro move looks like? So with these 4 questions, you're covering a large variety of bases, a large variety of big question marks will be removed. You'll know what a break upwards might look like, what a break downwards might look like, what the top might look like, what an altcoin season might look like, and the triggers for all of these things, at least vaguely. And with that, you'll have a plethora of knowledge to approach the market in the coming weeks and months as this next macro move potentially takes place. And for that reason, I think this video is exceptionally important. I think the answers that will be given here in this video to these questions are things that everyone should know if they're interested in buying and selling cryptocurrency in 2025. So before we get into it, the Bitunix Exchange, I use it personally. It's my primary exchange at this point. I don't use anything else. And that changed many months ago now. A lot of exchanges have been on a slow degradation. They've been degrading for a long period of time. I'm not going to name names here, but all of the major exchanges are simply not what they used to be. Bitunix, in my view, is what the main exchanges used to be. It's never had a single security breach before, not been hacked ever, exceptionally good. It's global. That used to be a textbook thing for crypto exchanges, apparently not anymore. This exchange is globally accessible. It's got hundreds of trading pairs, everything you'd expect from a major exchange, and it's very low and very fair in trading fees. And those fees, which are already very low, can be made even lower if you sign up with my referral link down below. Sign up with my link down below, get that 15% trading fee discount attached to your account for life, and look at the bottom of the screen here, get up to $8,000 worth of rewards by signing up with my link. Gifts for newcomers there. So check out that link if you're interested. Appreciate that, guys. Let's get into the content. We'll just go through these questions one by one, starting with question 1. What needs to break for a move upwards to occur? A question that we've answered many times and will continue to answer until that break actually happens. In my view, the macro range on Bitcoin stems between these 2 yellow lines here. These yellow lines are cyclically relevant. They go back to 2017 and 2021, to the peak in 2017, the peak in 2021, and cut right across the price action to form our current macro range. The top being at 114,000, the bottom being at 93,000. And hence, of course, if we wanted to break this macro range and continue to the upside, we simply need to break 114,000 and break this yellow line going backwards from 2021. Furthermore, that 114K level isn't just stemming from that single line right there. If it was, that would be enough, but there's actually much more to it. We can look at the Bitcoin power law chart, which has been exceptionally useful in previous cycles for predicting Bitcoin highs and lows. In this cycle and throughout the last cycle, the center line specifically in green has been very useful. This top we found on Bitcoin in 2024 in March was not marked by anything except for this. This was the only thing that marked the Bitcoin top in 2024, which held as the top for months, by the way, until the end of 2024. Literally for 8 months it held. It also marked our tops just like this yellow line back here in December and also in January. You can see those retests right there. And it also is, being that it marked the tops in December and January, it's the same line basically that we're facing in yellow right here. It's the same line, just slightly differently, stemming from slightly different things. It's a logarithmic regression line rather than a linear straight line. And it sits at 114,000, or at least roughly around that price region, hence reinforcing the same kind of vague area of resistance on the macro scale. It actually sits a little bit higher at 117, but it's the same rough area of resistance, meaning there very clearly is something there. On top of that, probably one of the most important charts in the crypto space, the large logarithmic regression channel on Bitcoin, just like the power law chart, marking tops and bottoms, very similar in a lot of ways, slightly different though, as the line is intentionally curved, and it's touching peaks, all peaks, including 2021. So it's arguably more important than the power law line at this point, since power law didn't actually predict the 2021 tops. All of this is to say, just like the power law line and just like the Bitcoin line stemming backwards from 2021 in yellow, it also finds resistance roughly in that $111,000 to $114,000 region. There's three separate things here, all pointing to the same price region for Bitcoin, which brings us to the answer for question one. What needs to break up for the move upwards to occur? Well, the three things on Bitcoin I just showed you, as well as this USDT dominance chart. This is actually perhaps one of the most influential ones, because it's more than just Bitcoin, it's the whole cryptocurrency market, right? The USDT dominance chart is a chart that measures the strength of USDT in a percentage format, the strength of Tether against the rest of the cryptocurrency market. When it goes downwards, that represents people selling their Tether and exchanging it for coins. So using Tether to buy coins. And of course, that means we want this chart to go downwards. This chart going down is good for crypto. And this chart going down, being good for crypto, means this chart has to break down from its major support zone in red. It's got a very significant support line here in red, which actually marked the cryptocurrency tops in 2021. We bounced here in 2021 on both occasions, on both peaks in March and November, which means that the crypto market went down because this chart, again, is reverse correlated to Bitcoin. The fact that this chart is sitting right on support means that has to break as well. So for the answer to the first question, what needs to break for the market to move upwards, for it to continue its macro leg, I would say if I had to point to a specific price point, it'd be hard to do so, but it'd be somewhere around 115, 116,000. It's moving upwards as time goes on. You can see this angle of incline right here on power law, on the logarithmic regression channel, on this line right here, and even on the USDT dominance chart. So it is moving upwards, but currently around 115, 116, something like that. We'll have to assess it at the time. It's hard to say the exact number, but though that kind of price range would need to break for the next macro move to be confirmed, and that is hence my answer to question one. So we've discussed what needs to happen for a continuation of the bull market to occur. What about what needs to happen for a bear market to be avoided? So in other words, what needs to happen for a bear market to be triggered? You can frame it in both ways. Well, in my view, the most fundamental level we need to be holding in order to avoid a bear market would be around 70,000. And that's just based off a simple range-based analysis. Right, we know that the peak of the prior macro resistance stemmed from around 70,000 to 74,000, and hence that is a basis for support right now, especially since that was retested for support back here in March. We bounced off that exact region and continued upwards. We're talking on a regular trend-based perspective, so that was the macro perspective in terms of macro ranges. What about the trend-based perspective? Well, what is a trend? A trend is simply a pattern of higher highs, okay, and higher lows, and that is what we have right here. If that trend is to be reversed, it would have to occur with first a lower high or a lower low. And so in the sense of a lower low, we would see Bitcoin go down below the recent low, which was back here at 73,000, and form one that is lower. That would be the beginning of a downwards trend and the beginning of a bear market. So until 73,000 or even 70,000 is lost, we are technically still in a macro upwards trend. Doesn't mean we're in a good position though, okay? But that is the start of a bear market, really begins below that 70,000 region. That's the absolute start of a bear market. In terms of still being in a decent macro foothold, we can be a little bit more precise and actually guess a little bit higher. Remember those yellow lines from before that define our current macro range? Well, that bottom yellow line, which is the current macro support, will be basically the level that is determining whether Bitcoin's in a strong position or not. So again, proper full confirmation of bear market really begins below 70k, because that would be the reversal of a trend on a complete scale. We'd see a lower low at that point. But in terms of being in a strong position and looking to the upside, that optimism would probably be going away if we dropped below the current range bound line in yellow, which is actually at 93,000. So you can see the difference in framing there. This is bear market territory, absolutely, because we'd be breaking the trend. But in terms of breaking the current range, we're looking at 93,000. I don't think we should be breaking the current range at this point in the cycle. And so for that reason, I think below 93,000, we start to get quite pessimistic about the future of this bull market, even though it wouldn't have been definitively ended yet. Furthermore, we can look at other things like the Ichimoku cloud line on the monthly chart, the baseline in red, which you can just look at through observation here. I don't need to explain. It's very clear. Every time we've touched it, we've had an interaction with it that is quite significant. And that line currently sits at around 68,000, which supports that $70,000 level I discussed. And the same story with the Gaussian channel on the weekly chart. This is a level that whenever we enter it, we move through it. So we enter it here, we move through it, we move through it, we move through it, and we move through it in the direction through which we entered it. That has happened every single time without fail. And so if we were to enter this Gaussian channel again, we would likely move through it. And for that reason, if we were to go below something like 86,000 and moving upwards, probably moving upwards to the $93,000 region, which is relevant because of this yellow line I discussed, we would probably move through it. So although we can't really be 100% sure whether the bull market's over until 70,000 is broken, we can be quite sure, at least, when 93,000 goes. And so there's kind of two different ways you can view that question, but I think I've answered it fully. Situation really starts to get, desperate below 93,000, and the situation is absolutely over below 70. At this point in the cycle, I would not want to be seeing $93,000 lost. What needs to break for an altcoin season to occur? A little bit of a nuanced question, because obviously altcoins are performing very differently to what they performed like before. We've seen a very different cycle this time. We've seen a cycle that's filled with Bitcoin having these long range bound consolidation phases, which is not conducive to positive altcoin performance. Altcoins rely on hype, and the fact that altcoins rely on hype is why they've done so well in 2017 and in 2021, because 2021 and 2017 were very fast paced. There was things happening. This has not really been that kind of cycle. Things have kind of been very slow. It's not typical in a bull market to see a 8-month consolidation. It's just not at all. And so it's no surprise that altcoins aren't doing well. But if we were to see an altcoin season, I think it would begin if we did see Ethereum. And by the way, this all has to, happen within the context of Bitcoin moving upwards first. So everything we said about question 1 would need to happen first. But then we'd also need to see Ethereum break above its major macro resistance at around 3,000. And there's so many implications of that, which I discussed yesterday. And we'd also need to see the Ethereum BTC chart, which is the Ethereum dominance chart, break above its 3-year-long descending resistance line on the RSI momentum indicator. If that occurred, as well as Ethereum breaking 3,000, as well as Bitcoin moving upwards as per question 1's requirements, we would see the highest chance of an altcoin season that we're going to get. And even then, it's not certain. But what I will say is this, all right? In the recent moves upwards we've seen since April, every single time we've moved upwards on Bitcoin, Ethereum has outperformed Bitcoin dramatically. So, there is still hope for the altcoin market. An altcoin season still can occur. And honestly, we are still primed for it in a lot of ways. It's not off the table at this point. We would just need to see that Bitcoin move first. We'd need to see Ethereum break 3K, and we need to see that Ethereum BTC chart break this resistance line. You wouldn't be expecting anything crazy like 2017, but in some capacity, I probably do expect it. I actually do expect it in some capacity if this next move does occur in the market. I think we are relatively primed for some sort of altcoin dominance, at least for a short period of time. And I'm not dwelling on this answer here because I've actually discussed that many times in recent videos, and I am sure my audience is bored of hearing me talk about it. But if you want my full opinions on that, you can go back to this video just 2 days ago, and you'll see kind of everything I think about it there. Or actually, this one 4 days ago is probably more insightful on the topic specifically. And the final question is, what might mark the top, right? What would need to happen for you to be sure that the top might be in, okay? Well, there's 3 different ways we can look at this. That might sound ridiculous, but there really is. We can look at it from a date range perspective, we can look at it from a price range perspective, and we can look at it from a indicator-based perspective. I've chosen one chart to display each of these perspectives. From a date range perspective, if we are in the month of October, right, you'd be getting very cautious because that is what the 4-year cycle expects the top date to be. The 4-year cycle, the date range trend that encompasses all Bitcoin price action, the date range trend that is built up of, 6 or 7 micro trends, including days from top to top, days from bottom to bottom, days from top to bottom, days from bottom to top, days from bottom to halving, days from halving to top. All of these micro trends come together to formulate this massive trend There's also trends from external markets, like traditional markets, like the real estate market, that come together to bolster the 4-year cycle. Everything within this cycle suggests that around October or November is when the top should be from a date range perspective. Now, if we get there and there's no macro breakdown and everything still looks good, awesome. You don't have to sell. But if we get there and we start looking weak, that might be a sign to get the hell out. So that's the first thing. The second thing is a price range based thing. And this is something we can't be too confident in because I don't actually have a price prediction on Bitcoin for this bull market. I don't think we're in a position to make one. But what I can say is there are price levels that could be important if used in conjunction with the cyclical analysis. So if we know that the top could be around October and we get to the peak of this channel here at 130K in October, then that might be a sign to get the hell out because you're facing major resistance at what is expected to be the cyclical deadline. Now, what is this channel? Well, it's an angle-based channel on the logarithmic chart. And what you'll notice is that it's drawing angles of incline from tops to tops and bottoms to bottoms, and every single cycle that angle of incline halves. Now, all we need to do is extrapolate that forward to see that around October this year, this channel will be reaching a peak of around 130,000. And so if the price reaches 130,000 within this channel in October this year, that could be a sign that this channel is holding, the 4-year cycle is holding as well, and it's time to get the hell out, right? If we reach 130,000 or if we reach the top of this channel and break it before October, it's not a problem at all. It's only a problem if we get to the cyclical deadline on a date range perspective, then it becomes a problem because we can use it in conjunction with the date range analysis on the 4-year cycle, right? So this channel alone is not really something to be worried about unless it becomes something we're retesting at the point in time through which the cycle expects the top to be. It's a long way of saying don't worry about retests of this channel unless it's October. Another thing we can look at to decide whether Bitcoin's at a top or not is the RSI on the monthly chart. Now, the monthly chart RSI has a very important channel, and this channel has actually marked the tops and bottoms of all cycles so far. And you can see that very clearly. Top right here, top right here, top right here, bottom right here, bottom right here, bottom right here. All of them have happened at the same time as relevant retests have happened to the relative lines. And so obviously if Bitcoin came up and retested the top of this channel, especially around October, that would be a sign to get out of the market. And lastly, how do you know when a top is in? Well, you can also just do it and predict the top by predicting, or not predicting, but reacting to a breakdown. So instead of trying to actually predict the exact top while the price is still rising, you could just wait for a breakdown to occur, which takes us back to question 2. And then once the breakdown has occurred, you can be sure, okay, the top was in. Yes, I held my bags down for a little bit, but at least I'm sure of that. And you can get out when the confirmation has occurred. So there's multiple different ways to approach the top, but I think I've shed some light on some of them. So guys, I've answered those 4 questions there. Let me know what you think about the answers. Let me know if you agree or disagree with some of them. And perhaps you have some charts that you want to show me that I'm not looking at. You can do so in the group chat. We have a group chat available. It's free. 24/7 for the community. You can post charts in there. You can check it out down below. Also check out that Bitunix Exchange if you are interested. It's my personal exchange at this point. I use it solely. I don't use any other exchange now. And I do that because it's got a very low trading fee, table in terms of, futures fees, spot fees. It's globally accessible. It's never been hacked before. And with my referral link down below, if you're interested in this, you can get a 15% trading fee discount. That will be attached to your account for life. So use that link down below to get that discount, to help out the channel and to help out yourself by getting on what I deem to be in a solid exchange. Thank you guys for watching. Hope you enjoyed, and I'll catch you soon.